Alrighty, folks, we're going to talk PCE, NVIDIA, Magnificent Seven, and market timing. But first, let me apologize. Mr. Dan Bird was other engaged last week. He was actually speaking at the Vegas event, so we were unable to record. I must have had 20, maybe 25 comments. Where's Dan? Where's Dan? Where's Dan? I'm sorry. I had
Well,
him in Vegas.
they should have gone to the event. That's where I was.
There you go. Should have gone or should have gone to the virtual, whatever it is. But
Hey,
let's
hey,
let's
by the way, that it was perfectly executed. That event was fantastic. Everything about it, every detail was perfectly executed, except for one.
oh no.
You should have warned your speakers not to max out the weight of their checked baggage.
Yeah, that belt yeah, if you were gonna check your bags with that belt, that extra 10 pounds, that's like whoops, there's $50.
Yeah, exactly.
Oh well. But I'm just glad that people took it home because you and I have both done events where the gift is left in the hotel room. So I think everybody
Yeah,
took it home. So that's good.
yeah. I couldn't keep it in the box. I had to take it out of the box to get it in the luggage, but
Eh,
still.
yeah, you threw the box away, not me. That's good. Well, hey, let's
Yeah,
get into it. It's been a couple of weeks since you and I've talked about it. What's going
yeah.
on in the market? We had NVIDIA announcement. We got Magnificent Seven. We got all-time highs. We got rates up, and we got PCE next week. Break it all down.
Yep, and we've got a short amount of time to cover all that today. So let me jump into it very quickly. So here's the website if anybody's interested. My newsletter is right here. It's free. You can go to the website and get it, or you can register your email and I'll send you a reminder that it's out here. But a lot of really good information in there. Couple of things that I added. This is on the homepage. I added the cycle of investor emotions.
Oh, I love that.
This right here.
Yeah, where do you think we are right now?
I think we are between enthusiasm and exhilaration.
Wow, I would guess most people would put us in the red somewhere. That is, yeah, that's your
Nah.
thesis. We're in a bull market. Yep.
Yep. No, we were in a bull market. Last week kind of proved that. This euphoria, that's where the bull market ends. It hasn't ended yet.
All right.
By the way, this is where most retail investors start buying.
Yeah, they get it at the top. Exactly.
Right? It's the highest risk. And then we go through these cycles: unease, denial, pessimism, panic, capitulation. That's the highest opportunity. It's when the bear market ends, and that's where most retail traders start selling.
Hmm. Yeah, after
Down there.
holding on for a year or so, and then they sell at the bottom. Yep.
Right. And that's capitulation.
Okay.
That's what I look for when the market is in a bear market. And then we go through it again: hope, relief, optimism, enthusiasm, exhilaration, whole thing.
Okay.
One other thing that I added was, which was interesting, is this 2024 year-to-date relative index performance. So there's Magnificent Seven right there.
Oh, look at you. Okay,
Um,
I get it. So
bigger.
relative strengths meaning everybody started at zero on day one.
Yes, that's right. Exactly.
Okay.
So we start the year, everybody starts at the same place. And you can see the Russell is lagging, Magnificent Seven is outperforming.
Hmm.
And S&P and NASDAQ are almost equal.
That's interesting.
Yeah. So I just put that in. This will update automatically.
Now,
Now,
I haven't looked at the Magnificent Seven. I'm guessing that's mainly NVIDIA. Like Tesla's down,
no,
NVIDIA's up, or what's going on?
no, actually, Magnificent Seven is right here on the website. You can see them down here, kind of.
Okay.
So Google is sort of not performing, and Apple's not performing, and Tesla, of course, is not doing very well. But the rest of them actually are doing pretty well.
Okay. All right.
And
So you got 4 out of 7.
we can step through each one. So there's Google, kind of going sideways. Next is Meta, definitely outperforming.
Yeah.
Now, Meta is one of the things in the NVIDIA earnings was Meta is the #1 buyer of NVIDIA equipment.
Oh, I missed that. Okay, that's interesting.
Yeah. So, yeah, Meta's taken off with AI, of course. Microsoft also is doing pretty well,
Oh, look at that. Yep.
staying up there very nicely. Netflix is doing really well. continuing higher. NVIDIA, of course, great earnings last week.
Do you think NVIDIA is going to have a stock split anytime soon?
I think they probably will. I kind of expected it in the
Yeah,
earnings
this time.
report,
Me too.
but they might wait a little bit. But yes, I think NVIDIA will definitely have a stock split. And I think you can kind of see before earnings, NVIDIA moves higher right there and back here. They started moving higher. I think they will move higher when it gets closer to the next earnings because I think everyone's expecting an announcement about a split. And usually companies do that during their earnings call.
During the earnings call, yeah.
And whenever there is a split, normally people start buying before the split happens.
Exactly.
Then the split happens. And with a strong company, historically, after the split, they will eventually get back to the same price they were before the split.
Wow.
So it's at 800 right now. If they do, let's say they do a 5-for-1 split, that's $160. They'll get back to 800.
Yeah. Okay.
So that's NVIDIA. Here's Oracle. Oracle is one that I just threw in there just for fun.
Yeah.
Because they're kind of in the not necessarily in the AI space, but they are in the database space.
Yeah, the one software that company that I looked at was Palo Alto Networks. Palo Alto Networks is one of those companies that I look at because they're in cybersecurity. I was like, hey, if they ever miss or have a problem. Oh, they missed. Yeah, they did.
I'll show you that one in a second. There's a SMCI, which is also AI. This one is just utter chaos.
Yeah.
Let me show you a different view. So they made it to 1100 and in one day went down to 800. They lost more than 200 points in a day and kept on dropping. They went to 700, hung out there for one day, and then bounced all the way back to 1,000 and then went down to 800. That's just utter chaos.
Yeah, so I read somewhere about SMCI that they were the second company ever after GameStop to have like a 97 score on relative strength or something, which was a huge red flag.
Yeah. Yep. Tesla, of course, is not doing well.
Yeah, that's an ugly chart.
That's the one right there. It's an ugly chart, and Tesla makes up 20% of the discretionary sector. So it's bringing that down. There's Apple. Apple's not doing great either, sort of just hanging in there, going sideways, hanging out right on its 200-day moving average, which is a very important level. This is where big investment companies like to add to their positions.
Okay.
So if it breaks that support significantly, especially with volume, that will be a very negative occurrence. So I'll have to watch how that does. And AMD, which kind of follows NVIDIA, kind of going sideways a little bit, but hanging out right there. AMD is coming out with some new chips that might compete with NVIDIA. But what NVIDIA has that no one else has is the ecosystem.
Yeah, dude, you and I are both been around a while. NVIDIA is this generation Cisco systems.
Yeah.
When the internet launched. I mean, it's just so obvious to me. It's similar.
Yes, absolutely. Very much. And there's Amazon doing really well. So it's going up there, and there's Google again.
Very cool.
So
all right.
That's the Magnificent Seven. What else do I want to talk about here? PCE. Let's talk about
PCE. Yeah, that's going to be an interesting one. PCE Core. I actually haven't seen the expectations. I didn't read your newsletter yet. I'm sure we have.
Yeah, actually, let's look at that. Let's look at that real quick. Expectation is for 2.8%.
Oh, wow.
Down slightly.
Okay.
I think it might not be down.
Yeah.
I think it might be even or maybe slightly up. Oh, well, probably even. I mean, it could be 2.8 might be reasonable, but it's not going to be down more than that, and it probably will come in at 2.9, I think.
Well, look at the month on month. That's a problem.
Right.
Yeah, we're going up again.
Right. That's right. Yeah, 0.2 to 0.4. Exactly. And one of the reasons is, and this
higher for longer, baby. Higher for longer.
There's higher for longer. It's only 7 months so far, by the way.
Yeah.
So here's the next CPI is on March 12th.
Yep.
Our agriculture food is still going up. I talked about this in the conference last week. This is why we kind of missed it, the CPI last time.
Yeah, we did.
Gasoline's still going up, oil's going up, CRB is kind of going sideways, but food is continuing to go higher. And that will be reflected in PCE. So yes, I think it may not be, the market may not like that report.
Yeah, I'm leaning that way as well. One of the things that when you look at PCE and you look at the math behind it, is it's kind of a blended CPI PPI report.
Yeah.
Right? You can really blend them together, and both of those were hot readings.
Yes.
2 weeks ago.
Yeah, CPI is what the price of the rate of change of prices of goods and services.
Yeah, things. Yeah.
Whereas PCE is what people actually are willing to pay.
Correct.
For those goods and services.
Correct.
So the Fed looks at PCE more than the other ones.
Yeah.
They look at all of them, but PCE is really important for the Fed.
Yeah. So have you changed your thoughts on when the Fed might cut? Because I think you and I were both on June.
I still think June, but it's, the jobs number will not come out this week, even though March 1st is on Friday.
Oh, that's right.
It's going to be on March 8th. So that'll be the following week. So we'll see what that looks like. But I have always said that it's going to be dependent on the unemployment, and unemployment is still way down here.
Yeah, and we've got weekly unemployment claims, which again, my audience looks at every Thursday. It came in at 201. We're back to the low bar. We were trending higher at 230, but now back to 201. So
right. So
doesn't feel like it's falling apart.
No, I mean, I don't think it is. I don't think the economy is falling apart. I think the Fed likes what's happening right now, frankly.
Me too. Yeah, me too.
I think they would love to just keep rates right where they are. And like I said,
well, let me ask you this question. For the first time last week, I read multiple articles that were kind of counter arguments, right? The general feeling on the market now is the Fed will cut May or June. You can argue which one. One article I read quoting Larry Summers said there's a non-zero, and I think the number was 15% chance that the next Fed rate move is higher, not lower. How does that hit you?
I said that last time.
You did. So you still think there's a non-zero chance that they go up before they go down?
Yes. Especially if PCE comes in hotter than expected.
Okay. All right. So I like that. We'll stay in touch with that. And then for the first time, I just started reading articles, I think Friday, about the Fed not cutting at all in 2024 or raising, neither up or down. They just stay on hold all year.
I think that is a very likely scenario.
Very likely.
I will repeat it again. I will repeat again. It will be dependent on this.
Okay. So we're watching this.
It's going to be dependent on the unemployment rate. If the unemployment rate stays down here around 4% or less, then I don't think they cut or raise.
Okay.
But as soon as this unemployment rate starts spiking.
Well, let's define spike. So 4.2, 4.5.
Here's the SOM rule right here.
Yep.
Recession started when the 3-month rises by more than a half a point above the 12-month average. Right now, the average is 3.5.
So wow, the average is 3.5. Jesus. Okay.
Right. So it's got to go above 4.
And probably has to go above 4 too, because just looking at the chart, that average is going to go up.
Yeah.
Over the next couple of months. So it's probably 4.2.
Right. And what happens when it does get above 4.2 in that range, and you can see it back here, it accelerates very quickly.
Right. That's what unemployment does. It's like at some point there's a crack and it just falls apart. Okay. All right.
And that I think is what the Fed's watching.
So let's just put it in simple terms. As long as the unemployment rate in 2024 stays at 4.2 or below, you see very little reason for them to cut or raise.
Correct.
Okay. All right. That's clear. And
And,
again, that'll be unique, right? Because one of the things that we, I don't know, argued about or disagreed on is I remember saying last year that I thought the Fed could be on hold for 18 months,
you did
which
say that.
I did
Yes.
say that. And you're
Yeah.
like, come on, Zuber, that can't happen.
Yeah.
Okay.
Yeah. You said they would be on hold throughout 24.
Yep. Yep. So more and more people are talking about it.
Right. So back here, 2005, 2008, or 2007, 18 months they were on hold.
That was the longest. Yeah.
Back here, they're on hold for 15 months.
Mm-hmm.
And, this is in the 90s and it was a secular bull market.
Mm-hmm.
But they were really, I mean, if you take all these things combined, they were on hold for almost 2.5 years.
Yeah, it was basically flattish. Okay. All
Right.
right. Well, let's switch gears. We needed to try to do two separate things in this short video together. You wanted to talk about a market timing?
Yeah. So I want to do this very quickly. This is something a couple of subscribers asked me about this, and they're also VectorVest subscribers.
Okay.
So they said, "What do you think about the VectorVest market timing system?" And I looked at it, and it's basically the same market timing system that I've had on my website since October. Now, VectorVest came out with this in January, and they're basically doing the same thing that I was doing, just using a little different entries. So they have a turbo, they call turbo, which is basically the 2 times leveraged.
Yeah, 2x. Yep.
QLD, 2x Qs. And they have a nitro, which is the 3x.
Oh, geez.
All right. So over this time period, and this is back tested, so you have to take that into consideration. But over this whole time period, which goes back to 2016, 195% average rate of return. This one's 642%. This is a more realistic one. This is what's happening right now. So here's the turbo, the nitro. This is directly from VectorVest site. And here's the Magnificent Seven. Over 1 year, turbo has returned 70%. Nitro, which is the 3x, has returned 64%. Magnificent Seven has returned 50%. And this is what mine has returned.
So 108 is more than 70, I'm guessing.
Correct. And I was not tracking the 3x, but I calculated it anyway, just out of curiosity.
Sure.
And that would have been 177. But I am tracking the 2x 108. And this is a very interesting, compelling, solid strategy. Mm-hmm. So right here is VectorVest, and they've got some criteria on their entries. My criteria is a little bit different. But interestingly, their entry point was March 14th. Okay. My entry point that I have been tracking on my website was March 13th.
Oh, okay.
So right here under portfolios, I update this every day. So you can see right here, QLD, that's the 2X. Mm-hmm. Start was 313s, up 108.44%. And I put down here what it looks like on early signal, short-term, midterm, long-term, and then the strategy itself. So if I notice the strategy should be going to cash, then this will say cash.
Okay.
Right there. Right now it is still long. And if you look at the long-term chart, there's March 13th right there. As long as this section here stays green, even through this downtrend right here, it stayed green. It's up 108% in a little less than a year.
So if we look at that red bar kind of in the middle there, if that had broken below the red line, that would have been your sell?
So yes, correct. So this was a sell way up here.
Right.
In beginning of 2022, when we had that long bear market all year.
So this is the one you've been telling me about. You're basically very few trades. That's the key to this.
That's right. Okay. So far, one trade in a year. 108%. Double your money, one trade in a year. That's why I say this can be life-changing. Now, the really interesting part, I'm going to show you this because we've got just a few minutes left, is I put these side by side with the VectorVest criteria.
Okay.
Okay. Now this is using the Qs, but the 2x and the 3x should equal the Qs because they're based on the Qs.
Right.
So you can use the Qs for your entries and then just actually buy the QLD or the TQQQ, which is the double or the triple.
Okay.
So over here is mine on the left. I use a weekly chart, whereas VectorVest uses a daily chart. On mine, on the left-hand side, you can see the entry is right here. And that's because this indicator down here went above the line, went positive. This indicator right here went positive. This one here already was positive. So these are just confirming. And then we got a green bar right here on this day. Now, these are weekly charts. So it says March 13th, but that's for the whole week. March 13th is a Monday, so that's for the whole week.
Got it.
So if you look at this at the end of the week, then you're on March
20th or
17th.
18th or whatever.
Yeah, right. Okay. Now, if you look at the VectorVest one, their first criteria is this 10 and 15-day moving average right down here, this green and pink moving average.
Got it.
It crossed right here on the 14th, and that was their entry on the 14th. All right.
Okay.
Can you see that? I know it's
I can.
Kind of
Yep.
All right.
I got you.
The day before that, you can see it's a long green bar the day before. That was the 13th, which is when my signal happened. Now, how do you get out? When do you decide to get out? For them, it's whenever they get a confirmed down signal. All right. So they would have been out here on the July 7th. However, for me, for my exits, I would flip to the daily chart and look at it on a daily chart right here. So remember, their first one would be right here on July 6th. July 6th is right here. I would not get out right there. It's still green.
Right.
It's still green. It's still at the top, and all of these indicators are still at the top. This one here is already rolled over, so there's the early warning signal right there. I would not get out right there. Now, they then would get back in right here and then get out again right there.
Wow.
So they'd have a lot of chop right through there. Now, their last one to get out was on August the 10th. And for me, August the 10th is right here. And that's where this green line, that's where these are starting to cross to the downside right there.
Yep.
See that? Down below, it's already crossed right there on August 8th. These have already crossed up here. So I would have been out probably a little bit before this, but I could use the VectorVest exit in combination with mine to confirm that I should be out. So I'd be out in August, and for them.
So let me say it a different way. So the first time you got the out, you would go to your chart and say, nope, still good. You blow it off.
Yeah.
The next time you got the daily update, you would look at your chart and go, ooh, time to get out.
Yes, that's right.
Okay. All right.
And then their entry back in was actually down here where these cross again. So that was 11/7. And for me, the re-entry point would have been right about in through here. November 11th would have been right there. That's where that's where the red went to green right there.
Got it.
So that would have been good for me. But if you notice down here, this one crossed back here on November 2nd. And this one up here crossed on November 2nd. So November 2nd is when I would have probably got back in. So mine gets me out a little earlier than theirs, and mine gets me in a little earlier than theirs.
Well, also yours has less chop, right?
Mine has less chop. That's right.
Yeah.
Less chop, but they're doing essentially the same thing.
Right.
So it's really interesting. I'm starting to see this kind of strategy more and more.
Okay.
But I've been tracking this since October now, and you don't really need to know how the sausage is made.
Yeah.
All you need to do is track it right here. And when this strategy says cash, then you go to cash.
There you go. Well, buddy, I appreciate you again. Thank you for coming last year to the event. The audience loved you. Sorry for the long line that you had after your session. Hopefully that was enjoyable. Where can people get the newsletter? Where can they subscribe?
Yep, on right here, breakpointtrading.net. You can just click here for the free newsletter. If you want to register your email, then I'll send you a reminder. There's no charge or anything for that. We don't sell or share emails with anybody, so you won't get spammed because you come to the site. But that's where the newsletter is. By the way, I really enjoyed talking to a lot of the people. A lot of the people knew who I was just through this video.
Awesome.
But I didn't know who they were. But it was really great meeting them and talking to them. So I really enjoyed answering the questions. And one in particular that I really remembered was the guy came up to me and said, and he stood in the back just listening. I said, "Hey, do you want to come up?" He goes, "No, let everybody else go. I'll listen." And at the end, he came over and he goes, I've just been staying awake at night on this one stock that I own.
Mm.
And it just worries me to death. And I said, "Well, tell me about it." He goes, "Well, I used to work for a company and I bought their stock and I own it. I own quite a bit of it, but it went way up, and then it came way down. And I didn't know when to sell or what to do. And I just worry every night that it's going to crash again, to be out of my money."
Oh,
And I said,
no.
"Well, why don't you put a stop on it?" He goes, "Well,
Yeah.
what's that?"
Oh, no. Yeah.
So I explained what a stop was. I explained to him how to do it. We actually looked at the chart while he was there, identified where the stop should be, which I said it should be a 69. And then we went to VectorVest, which actually said it should be at 69. I said, "Call your broker as soon as you get back on Tuesday and put a stop in at 69, and you don't ever have to worry about it again.
Yeah.
Just sleep at night. Just if it goes down
Yeah.
to 69, then you're out
Yep.
at a good price. If it goes up, if it keeps going up, then just move your stop up. Just keep moving it up
There you
until
go.
it gets stopped out. You don't have to worry about it. Don't, lose sleep over something like this."
Very cool, man. Well, I appreciate you doing that. I appreciate your family. Take care.
All right, see ya.